As the old saying goes, if you don't use it, you'll lose it, and if you squeeze too hard, wow, let's get this crypto. Wow, is Bitcoin on the verge of a major break to the upside, as you can see consolidating in this pattern? Or in fact, are we setting up for something on the daily chart even more treacherous? Can we expect Bitcoin to get rejected off of this blue 21-day moving average that we have not been above since back in the middle of February 2020? Over a month ago, it's been over a month that we've been above this moving average. This is the first time that we're really coming in contact with it since March 6th of 2020. Will Bitcoin get a break to the downside? And if so, what are our targets there? But more importantly, to the upside, what three targets do we have? And specifically, which one is most likely the hardest to get above? As well, with a seeming potential short-term reversal on the horizon for the broader economy because of this proposed stimulus package that has just reached a conclusion over the last few hours, will we see the economy get a short-term bounce? Will it be a sharp V like some people are talking about? Or in fact, will this not be a V and end up being a letter that instead of going back up, it's a letter that goes down? Let's get munching. Wow, what is going on, everyone? Welcome back to another extremely important episode for Bitcoin. Today, we have some stuff to talk about because, guys, on these charts, we're consolidating a lot and we're getting close, in my opinion, to a big move. But the question on everybody's domes is, will it be a move to the downside or a move to the upside? So that's what we're going to be spending this episode talking about. TA all the way, all day. So much good stuff to talk about. But guys, before we get into that, I do want to mention, okay, we have this proposed stimulus package here in the U.S. for these markets, $6 trillion, okay? Huge. A week ago, we weren't even talking about a fraction of that, so this is huge. Now, will this positively impact the markets? Or, in fact, are we just getting started? Is the economy on a downward spiral? And if so, how could that play into Bitcoin? Could Bitcoin reach $1,000 if the broader economy falls for months and years potentially? We don't think so, but we do have some things we want to talk about in regards to Bitcoin's correlation and response to what is going on, guys, because it's been absolutely crazy to be living through this. So guys, only a few more days until the end of the month. If you want to enter for this ledger, all you have to do is leave a comment below, hit that like button. Let's see if we can hit 800 likes. Hit that subscribe and ding the bell. So guys, so far we do have some sort of recovery here on the Dow Jones we have, as well as US oil, actually not moving up too much, but on the Dow Jones you can see the market is reacting a little bit positively to this news. Now, will this continue? Potentially. I think we could even potentially all the way go up to 23,000. Sorry, that's quite a big number there. But overall, I think the economy is in some trouble, okay? I think a lot of people are aware of this, and I think many people are just holding on for dear life. Bitcoin has been performing extremely well over the past 2 weeks. And now we find ourselves in this very interesting pattern here. So here on the 4-hour chart, you can see this. We have this clear uptrend here on the 4-hour. You can see it here. We already have multiple touches over 3 different time period touches here. 1, 2, and then 3. And then as far as the top, we have the Fibonacci set here about the 7,000. The 7,000 is basically the roof of this, the ceiling. So this is kind of really what's been holding the Bitcoin price down. Breaking above that, we could see a move. But guys, we're really consolidating in here. Interestingly enough, if we do see a downside move, this area right around the $6,200 area could provide a fair amount of support right here for a few reasons. It's an important Fibonacci level, 0.236. It is this trend line. We'd be revisiting the bottom of this trend line for the 4th time over the past 2 weeks. If we would revisit this $6,200 level, we go to the daily, and the 6,200 as well is exactly where this next descending line is, as we're currently potentially being rejected off the very top of this descending channel that we've been in. Now, after re-entering it, we've been in this since the summer of 2019, almost 10 entire months now we've been in this channel. And we're currently facing some sort of rejection. We can actually zoom in here and then we can get back to the 4-hour chart. You can see here we're getting a clear, potentially short-term rejection. This could easily break up to these other key levels, but as for right now, you do see over the past 2 daily candles, this has been a very heavy friction zone, which also is the very important 21-day moving average, this blue line here on the daily chart. Now, we haven't actually been above this concretely since February 15th, okay? About a month and a half ago almost at this point. We were at 9,700 US dollars after we broke and after we failed to get above it then on the 25th of February, exactly 30 days ago today. Things went pretty haywire, found some support on the 200-day moving average, yet again failed to get above the 21-day moving average. And then after we failed that again, things got pretty dirty pretty fast, all the way down to 76, bounced around for a few days there. And then, guys, as you guys know, everything went to baloney right there. Now I want to get back to this chart on the daily, but I want to finish up here on the 4-hour chart. We are coming to a culmination, a climax you could say, on this chart. There's not much more room to be traded in here. If we break this trend line to the downside, if we break this trend line, if we come down here and we break this, there is some decent downside that we could go to here. Now the question is, are we going to find support and create a higher low here, as we've been continuously doing for the past 2 weeks? Or on the more macro trend, are we actually going to break this and create a lower low? Okay, could we even do something like that? Could we even go down to $3,000 again? So we'll talk about that a little bit. That would be the most dangerous of news. That would probably play out over weeks and months, not exactly anytime in the next few days here. But as far as a break up, we could see ourselves go up to that 77, even potentially at the very height, 8,000 US dollar mark. Now, there's a reason I talk about those specific levels. When we zoom out on the daily, this is the 4 hours. So this is pretty important here. If this would be a pattern consolidating and we're going to break out, that's important. But more importantly on the daily, we have this. The 7,200 and the 77 are just extremely important for numerous reasons here. Okay, the 77 is literally basically on the line where we plummeted $4,000 in a single day. This is a very important line. I think this will be the heaviest level of resistance on the upside. I think at this point moving forward, this level of 77, between 7,700 and 8,000 is actually more important than 10,000 at this point. Okay, because as time goes on, the resistance here is descending. Right now it's around 10,200, 10,150 roughly. And as time goes on, it gets lower and lower. Actually, as of right now, if we actually broke up to this today, it would be roughly 10,160. Yeah. Let's say we push out another 2 weeks, it actually gets to about 10,000. So this line of resistance is descending there. Guys, we talk about this all the time. This is like the main overhead resistance for the past 2 years there. Everything is just consolidating and getting smaller and smaller, just squeezing into a little pattern there. Again, very close, very importantly, coming up to this halving, okay, less than 60 days. Very importantly, we're getting all this consolidation and all of this pressure building up. But that 77 to 8,000 range, again, guys, I just think it's going to be so crude. If we get above that, then things get insanely bullish, but we don't get bullish until we get above that. Remember, we would break above this key line. We get above so much resistance here in the VPVR. You can see the VPVR where it has this line here. Again, basically the same area, just so important right here. And again, I think there's going to be a lot of resistance on the upside. So for the downside, again, I still think from what we said a few days ago, 54 would be a very good low target if we're going to maintain this structure. If we're going to be putting in lower lows and go below something like this, then I wouldn't even know what to say at this point, because that would be below 3,800. So we're not even going to consider that scenario just yet. Again, that would be pretty much slicing the price in half as of right now. So we don't think that's very likely in the short term. I mean, still our momentum is building upwards, so we're going to look more on the upside here. But really, this level of 72, our first line here, and 77 are just very key. And again, another important thing, we do have this death cross actually forming right now. This is the 50-day moving average crossing below the 200. And usually that's a pretty bad sign, but we had the golden cross back on February 17th, about a month and a half ago. And after we had that cross, basically the only thing that happened was price went down. Usually that's a pretty long-term bullish sign. So the fact that we're getting a longer-term bearish sign right here, again, I don't really think it's that important. The fact that this did nothing but push the price down, maybe this will push the price up, even though it's kind of counterintuitive. Death cross usually pushes the price down, golden usually pushes the price up. But since we got only the price going down at the golden cross, maybe we'll get the price going up here at the death cross. Really anyone's guess there, because things are kind of seeming a little wacky right now. But even more importantly than getting above these, I do think in the short term is this 77. I think it's so key right now. There's so much historical volume right there. And most importantly right now, we want to see a bounce above the 21-day moving average. This is very key here. As you can see on the weekly, we're not really anywhere near that. The 21 weekly moving average is all the way up around that $8,000 level. Again, yet another reason why I think that's just going to be so hard to get above. That's on the weekly. And again, that translates to roughly this area right here on the daily chart. So again, I think this is where a lot of resistance will be. In terms of a downside target, we're going to say right here about the 54, an upside target. If we get a breakout on this hourly pattern, then definitely I think this area will be a level where if we break out to, we'll find significant resistance, and we might not be able to get above in the short term. If we do get above that in the short term, then again, yeah, this entire zone, if we break above this entire zone, the 77 to 8,000, and we get a concrete level of support there, then again, I do think maybe we could actually be shooting up to test that 10,000 again. That could happen very quickly, but if we want to get to new all-time highs, I think that's definitely what's got to happen. Wow, so that's going to do it for this episode, guys. Make sure to stay patient, okay? We're at the very top of this descending channel. And on the smaller time frame, we're at the top of this pattern here. We only have, multiple 4-hour candles to play out potentially before we break out of this. So there probably is going to be a big move soon. Maybe leave a comment below which move you think it's going to take. A big bounce up, or we're going to get rejected. Again, a lot will be based on this. And right now we're getting a lot of momentum to the upside. So maybe we'll get a break up.